time we gathered go through too much instructions on how to use this service. So some of you are major WebEx users and don't spend a lot of Zoom time. The view in the top right corner, I prefer to look at us like the Brady Bunch. We'll be bringing the speaker forward so that you can see that person and the screen that they are sharing. We're muted, all of you, but you may unmute yourself and ask questions when that time comes. There's a way that you can raise your little hand in that chat feature if you want. You can also see who else is here in that participant section and communicate with each other. Do use the chat. We'll be following along with that and asking the questions that you have posted. We're also recording and we'll share more information with you all shortly, but let's get started. We have 1 hour. We want to make sure that you guys get the information you came here looking for. I'm Aaron Nelson. I'm the president of the Chamber, and as you guys know, we have spent the last 10 months at this organization doing everything that we possibly can to help you navigate your way through this crisis and emerge successful on the other side. Our mission, our purpose is to connect you with people and information and resources, to be an advocate for you, and then to drive progress and build our community. There's been tough times, as you guys know, in our community. We have counted now 45 permanent business closings, but it is also the case that we have registered 35 business openings. And those of you who are with us on this call, congratulations to you for having made it through this far. But we know it is exhausting, and we are hopeful that the resources here will help put gas in your bus and help us all drive a little further through this crisis. We are thankful to our partners who help spread the word and invite folks to this meeting: the Chapel Hill Downtown Partnership, the Durham Chamber of Commerce, the Hillsborough Orange County Chamber of Commerce, Chatham Chamber of Commerce, Alamance Chamber of Commerce. We're grateful for our partners as we all work together to serve you all, our customers and clients, the business community, our local employers. Joining us today, we have a few set of experts who we trust to give you advice about how best to engage with the new CARES Act, the new funding, the Reload PPP2, whatever you want to call it. We've had all of them before, and we are grateful to have them back. First, we're going to hear from two experts from the AICPA, the American Institute of CPAs. I think it is the world's largest professional association now, with international partners, Kari Hipsak and April Walker. They themselves are both CPAs. Kari is a senior manager with the firm services team at AICPA, and April is a lead manager in public accounting, tax practices, and ethics. Also joining us is Patrick Rodriguez from the Small Business Administration. You can think all the way back to mid-March last year. Patrick was our first speaker when we had an all-member meeting to talk to us about that economic injury and disaster loan. Today, he is back. He is our senior area manager for the North Carolina District Office to talk about the rehydrating of the EIDL loan, some new EIDL grant opportunities, and answer your questions regarding those things. So we're grateful to have them with us to help guide us through the conversation on PPP Round 2, the COVID relief bill. We will have time at the end for questions. Because we have a lot to cover, let's just get to it. Let's start with our CPA experts, April and Kari, who have a presentation to share with us.
Great.
Welcome.
Thanks so much, Aaron. I will be kicking off real quick from the AICPA perspective. April and I are happy to be back again, and we just want to say thank you all for letting us come and speak to you and offer as much insight as we can provide into PPP. As a reminder, the AICPA does not represent authoritative guidance. We are simply interpreting it. So with that, let's go ahead and get started. Of course, I can never find the presenter screen when I'm on the spot. There we go. So let's do a quick overview of where we are with the new PPP, or I should say refresh PPP. It's not necessarily new. Back at the end of December, the Consolidated Appropriations Act of 2021 was signed by the President on December 27th. And within that, there is the Economic Aid Act, which is where the PPP comes into effect. So one thing that this great act did was to reopen the Paycheck Protection Program. On this first bullet, I want to emphasize the wording of the first draw and the second draw loans. You may hear PPP2 referred to when it comes to the new act, and you may hear PPP1 referred to as well. So I just want to be crystal clear. PPP1 is essentially the CARES Act that we had in 2020, and PPP2 is basically this relaunch program. However, as you work through your applications, there is still a first draw and a second draw. So we've gotten questions where people have asked, can I get a PPP1 loan? Well, what you're looking for is a first draw PPP loan. So I just want to be crystal clear on any type of verbiage in that area. A couple of other things that the recent act, as well as guidance that came out last week, has helped to establish was the removal of the EIDL grant from reducing PPP loan forgiveness. A lot of people were rightfully upset that this amount was reducing any eligible forgiveness that they applied for. However, the SBA and Treasury had to include that because it was written into the original CARES Act. So that has been removed with this new act and is no longer a requirement. Also within within the reopened PPP, we have new, oh my goodness, you guys, it's too early. We've had too much going on. I'm so sorry. We have newly eligible entities. So these are described in greater detail within supporting guidance, the act. April will help walk through where you can find some of that information. But in short, 501c6s, destination marketing organizations, local news, and housing cooperatives are now eligible for PPP. In addition, eligible expenses have been added to the existing list of eligible expenses. There are now operations expenditures, property damage costs, covered supplier costs, and worker protection expenditures included as eligible that can be used when applying for forgiveness. Please note on the worker protection expenditures that it does not include residential real property or intangible property. And I know I'm going through this really fast. We have a lot of other great content to cover. We just want to make you aware of what is available. And then if there's any follow-up questions, we'll have links to guidance available for you as well. One thing to note is, like I differentiated earlier between first draw, second draw, and the broader PPP program, these eligible expenses are still now applicable, I should say, to PPP loan forgiveness if forgiveness hasn't been granted already. So keep that in mind if you haven't applied for first draw forgiveness yet. Okay, so some additional provisions in the Consolidated Appropriations Act. You can see the funding that was available up on the top right-hand corner, $284.5 billion for PPP. And as we've discussed extensively, first draw, second draw, that is the distinction. And a second draw was added so that it could assist the hardest hit borrowers. And you'll see a quick description here of who include those hardest hit borrowers. Generally, it's the smaller entities with 300 or fewer employees. And if there is a business that has multiple locations, it's not more than 300 employees per location. So that distinction was made. In addition to that requirement, there is a gross receipts decline test. And that says that 25% gross receipt decline in any quarter in 2020 compared to the same quarter in 2019 will make an entity eligible for the second draw. We're working on specific resources to address this gross receipts decline. It's new, there's a lot of questions, and borrowers just want to make sure that they stay eligible. So a couple of items to note here is that you will see in the guidance, it lists out what to do if you were in operation for only part of 2019. So if you were in operation for Q3 and 4 of 2019, what your options are to compare to 2020. There is also an option for an annual comparison if you were in operation in 2019 and 2020. Again, we have resources that will get into that detail, but just wanted to give you all a heads up here. Within that gross receipts, EIDL and PPP are not included, so you can remove those from any comparison on gross receipts. And there was clarification on the 3-month period or using a fiscal quarter. And I apologize, the slide is not updated. I just heard on a presentation yesterday that it is in fact a calendar quarter and not a fiscal quarter. And the other component to keep in mind for second draw is that there is a requirement that borrowers use or will use the first amount of first draw funds. When a borrower applies for the second draw of PPP, they must make an attestation to the lender that they will use all of their PPP-1 funds, including any increases that they might have been eligible for under the new act. And then before they get the second draw funds, they have to provide documentation to the lender that proves that they have used the funds. So keep that in mind. The lenders will withhold second draw funds until that documentation is received. And then the last bullet, I did already sort of briefly mention that the comparison periods will differ for borrowers depending on when they were in operation. And with that, I'm going to turn over to my fantastic colleague, April Walker.
Thank you, Kari. So I'm sure there's a lot of information here, and there's no possible way we can talk about all of the nuances and changes, but again, hopefully we'll be able to answer your questions. One thing we did want to highlight from a tax perspective is you likely heard, while PPP was going on from March until December 27th, when the act was signed, that expenses related to that were otherwise deductible for funds received from PPP were not deductible for tax purposes. With the Consolidated Appropriations Act, that is changed. So an effective retroactively. So even if you had a CARES Act PPP, you've already applied for forgiveness, everything's done, you still are allowed to deduct the expenses related to that. And then, you might have questions about, okay, well, how does this accounting work for, getting the loan off the books? And I'm not going to get into all the tax techie information, but what will happen is once the loan is forgiven, it will be considered tax exempt income to the entity. So again, there should be no effect to the business from a tax perspective for generally for the PPP funds. All right, next slide for me, Kari.
I heard you, April. It's not. Oh, now it moved.
I know. I know you're working on it.
Okay.
Thank you. So we did want to provide you, and we'll send these slides over to Vanessa so we can get them distributed. There are links to the latest guidance that came out last Thursday, Friday. I don't know what day it is still this time. So there was an interim final rule on the first draw, and it's like 80 some pages long, and it does provide a lot of information on how the first draw works. And then there is a second IFR, interim final rule, on second draw loans, which again is a little bit shorter but still bulky and gives a lot of information. It's pretty decently easy to understand if you read it. So I would recommend, especially it has at the bottom some frequently asked questions and table of contents. So I really recommend digging in there and reading itself. And we just wanted to note, you probably know this, there is the portal open yesterday, but be patient. Don't be anxious. There are some set asides for smaller lenders and for some smaller borrowers, and So, you know, as far as we know, and from what we're hearing, there's not any reason to panic. There should be funding appropriate for the needs. Okay, next slide. Thank you. So again, we'll get the slides to you. This provides a link to where we have resources. And even if you are not a CPA and not a member of the AICPA, we do have some resources that are available to you. You may have to register, but they're not behind a paywall. So what we're working on, which should be available this week, is a summary. It's like a 12-page summary of all of that information that we've kind of talked about and more on some of the rules, which so you can go on our website there, aicpa.org // I guess that is, SBA, and receive that summary document. We have calculators, lots of information and resources that you should be able to use as a business or working with your CPA. So just know that that is out there for you. All right, so according to my time frame, I have 2 extra minutes, so we could have talked for.
Let me ask 2
more
questions.
minutes. I know we have questions. I wanted to make sure that that Patrick had time.
We'll come to Patrick in a second, but will you, for us, there's also new rules about what is easily forgivable. Can you describe this sort of question of you had less than 50,000 or you had less than 150? How simple is it now?
So we're still waiting for loans that are under 150,000, and that will be 4 loans for, again, you know, first draw loans, second draw loans, ones that haven't been forgiven yet. For if you're under 150,000, it has not been released yet, a 1-page form for simplified forgiveness. Now, simplified does not mean automatic, it means simplified. So there will be, again, less information that you'll have to, you know, put together.
But the law instructed the SBA it gave them 28 days to create a form.
I think that's right. And I've seen a date of like January 20th. Don't quote me on that, but it's coming, and it's coming soon, that form. There is still the under $50,000, the 3508S. So there are still some simplified options, but in what we're recommending people do at this point is just like wait. There's no need to apply for forgiveness at this point, at this moment, until we wait and see, you know, especially if you're under 150,000. Just wait and see what's out there for the form, and hopefully that's going to create less stress and drama for applying for forgiveness.
And also a reminder that this is a loan between you and your lender. The feds are involved, but the borrowing this time in draw 2 and draw 1 will be with a bank or a financial institution, and the forgiveness is also from them.
Yes, you request that through their portal, through the lender's portal.
Correct. So some people have gone on to, they want to go to the IRS's website or whoever's website, get the forgiveness, fill it out, and bring it to the bank. Your bank will be super frustrated by that. Don't do that. Do the forgiveness with who you borrowed it from.
Yes.
And if you, 2 more quick questions. If you didn't do the first draw, you may now do a first draw without the 25% reduction in revenue. So 25% reduction in revenue is only for organizations that did a first draw. We go again. Do you know whether that will be accrued revenue or cash revenue in that quarter?
I think we've seen. Go ahead, Kari.
Sorry. It's based on the borrower's accounting method. So we haven't seen anything that indicates one way or the other, but in the guidance, they just have in parentheses, it's based on the borrower's accounting method.
We'll probably get questions of whether the borrower can change their accounting method. We have many people who billed a ton of things in the second quarter. They just never got paid on them. So they show tremendous revenue in second quarter, accrued, but is unpaid. And so and we've had some questions about the outstanding accounts and how to treat them, but we'll be patient and wait for that to come.
I
Last
have a
question
little
before we
bit of-
pivot to you, Patrick, we're on our way to you, is about if you have a new enterprise, when must you be in existence in order to use either draw 1 or draw 2?
That would
So-
that'd be
Go
Kari?
ahead, Patrick.
Go for it. I wanted to go back to that last question if I could. In the IFR that talks about second draw, there is a footnote that talks about gross receipts. And it says gross receipts to include all revenue in whatever form received or accrued. And so it has a little bit of some guidance there in that page 8 of the second draw IFR.
Perfect. Patrick, thank you. And to what April said, y'all is right. If you worry about reading IRS tax documents, you should, I mean, that's why you pay a CPA. But this one is readable. The FAQs are eminently readable. It is worth a scan. It really does ask all the questions you want to ask and gives a pretty clear answer. It sounds daunting, but hey, for $100,000, it's worth reading the book, right? So I do think it's worth it.
And just let me say one more thing, and then we'll let Patrick talk. We did talk about, so if you're doing a first draw for the first time now, you're back to the 500 employee limit. It's not 300 employee limit, it's 500. So you're kind of back to the first rules. So just
confirm, Kari, also that we discussed just before we came online. If your business did not exist as of February 2019,
February 15th, 2020, you have
2020,
to have been in business by that date in order to apply for either draw of PPP.
All right, so you created your business, you're being harmed by the pandemic, you are ineligible for PPP draw 1 or 2.
Yes.
Okay.
There are some rules. Yeah, there are some rules about, like Kari alluded to it, but the so if you're trying to look at second draw and you're trying to, you weren't on operation in 2019, there are some alternatives there.
And Patrick's may be available. He'll talk about that in a second. Let's move to Patrick Rodriguez. Patrick, we're so grateful to have you with us. Kari and April, we know you guys are busy as anything. And so the rest of everybody knows the AICPA, I think, helped write this thing. You all were at the table, really pushing hard to make it what it is. We appreciate your expertise today. Patrick, you've been quite busy over these last many months. Thanks for being with us again.
Sure.
What can you tell us about SBA programming with respect to the new act?
Sure. Well, I'd like to start off with a word, and that word is patience. And that goes to both the lenders out there and to the business owners. We have kind of an idea of what the first iteration of PPP was like, and it was kind of a mad dash. We really are trying to calm the waters, so to speak, in regards to this relief bill in the next iteration of PPP funding. We believe that there'll be plenty of PPP funding available for all the businesses that apply for either first draw or second draw. And so we are trying to calm the waters and let folks know that, be patient. We know that, SBA has opened up the portal for community financial institutions as of yesterday. And community financial institutions are community development financial institutions, minority deposit institutions, certified development companies, and micro lenders. And if you bank at those institutions, then you now have access to the PPP first and second draw. First draw, tomorrow would be the second draw. And for those that are not banking with those institutions, please be patient. We'll, in the next days, SBA will be letting the lenders and the public know when the rest of the small businesses out there and the rest of the lenders will be able to make the PPP loans. But we don't believe that there'll be any lack of funding when it comes to those first and second draw borrowers. We're also suggesting and encouraging people to go to the SBA Lender Match portal to, if you have an existing relationship with the lender, great. If you had a good experience with your first draw, please go back to that institution. But if you didn't and you're looking for a lender to do a PPP loan, we're recommending to go to the Lender Match portal, which is on the SBA website. That's a short, like 15 to 20 question online form. You hit submit and it goes into the SBA closed ecosystem of lenders. So then they can then reply back to you and let you know that they are available for PPP lending. The good thing about that is that you're not sending it out into the universe and having a million solicitations in your inbox the next day from credit agencies or credit card companies. It's going to a closed ecosystem of SBA lenders directly, and these are PPP lenders. So that's a really easy way to find a PPP lender if you haven't already worked with one. On the other big picture stuff, we're excited that we haven't expanded, for first draw and second draw. We're excited about the expanded uses of the PPP loan that now are going to cover operations expenditures, property damage costs, supplier cost, and worker protection expenses. So that is a big deal for a lot of small businesses that were trying to use that money to protect their workers and to go online, create a website, pay for servers, pay for cloud services. All that can now be, PPP funds can now be used to do that. And
Can you talk to us about idle loans, Patrick? I'm sure about
Sure,
to.
sure. Yeah, I will. I'm just going to mention one more expansion of the program is that now that we all know that businesses, partnerships, corporations, LLCs are eligible. Sole proprietors, independent contractors, self-employed individuals are all eligible for PPP. But now we are including 501c3s, 501c6s, 501c19s, which are veteran organizations, tribal businesses, and housing co-ops, destination marketing organizations, news organizations, and I think electrical co-ops too. So that's a huge expansion of available industries or eligible industries for the PPP. I think you've already covered that the EIDL advance is will not be deducted from PPP loans. So we've covered that. I just want to reiterate that. And like mentioned earlier, April mentioned earlier, we have until the 20th to come up with the guidance on the shortened forgiveness form, but also the EIDL advance. So if you haven't heard, if you received anything less than 10,000 in your EIDL advance, we're creating the portal and the method or whatever it's going to be to then get you the remainder up to 10,000, which was the original intent of Congress. So that should be out in probably by the 20th.
Let's stop there for a second because that's super important. Some folks, you applied for your EIDL loan, it was $150,000. You're supposed to get a $10,000 grant to go with it, but they began diminishing that and at some point ran out of that. Will people have to apply again, or if the Fed sent them 2, they're going to send them the other 8?
Yeah, well, to be determined. We hope that it should be just a simple deposit because we have all the information we need, but we'll see how that gets implemented. And by the 20th, we've already had kind of a internal call, and they said they're on track to get that worked out by that deadline of the 20th. So
Originally it was 10, but then they said we indexed it to 1,000 per employee. Will that
Right.
still be indexed if you are, I saw Earl Monroe on this call. He's a sole proprietor, maybe has 2 employees. Is 2,000 his limit, or will it be 10 again?
it should be 10. That was the original intent of the bill, and that's what we're shooting for. Because of the massive demand, SBA made a calculation and then lowered it to 1,000 per employee. But with the new economic relief bill funding, that should go all the way up to 10,000, regardless of number of employees.
That's unbelievable. Thanks,
Yeah.
Patrick.
So if you are, as we know, the EIDL is still open, EIDL portal, the Economic Injury Disaster Loan Portal is still open. It's been extended until December 31st, 2021. And so we have another almost full year to apply for a disaster loan if needed, and that is a 30-year term loan at 3.75% interest for for-profits and 2.75% interest for nonprofits. When you apply and you receive the funds, then you have a whole year of deferment until any principal and interest is due on the disaster loan. Interest does accrue after disbursement, but no payments are due until a year after. The portal's been had its growing pains. As we know that it wasn't meant for a whole country to apply at once. It was meant for like a regional type of disaster, unfortunately like a hurricane or something like that. But it's scaled. We now have a sizable increase in the number of loan officers, loan specialists, and call center reps. And we really urge that people, when they fill out the form, just double and triple check your entries to make sure you're putting in the right email address, a good phone number, a good email address that you're going to be checking, a good phone number that you'll be answering, and the correct banking information. About 20% of all SBA loan applications had mistakes on those 3 and caused a delay in their disbursement. Besides that, we're working through the backlog of reconsiderations, and if you need any help, if you have applied at any time and got a denial letter, the top 3 were lack of unverifiable information, lack of economic need, and credit related. So those are the top 3, but if you had any of those denial letters, please call me or email me, and we can get the right forms and get that reconsideration turned into the SBA so you can have a second shot at that loan and hopefully receive that funding for your small business.
If folks applied and received EIDL, may they apply again?
So no, we don't want folks to go into the portal multiple times and apply more than once for the same disaster. What that does is that clogs up their loan application, and if one person goes in and applies and then 3 months later they're still working through it and they get frustrated and they go in again and apply. I've had folks apply 9 times and they're just delaying their own loan disbursement because they have to work through those duplicates. What one would do would be to send an email to the recon, the pdc.recons@sba.gov, and they would put in the subject line EIDL increase, and they have to attach a few documents, their latest, greatest tax returns, it's been completed, 4506T, which gives us permission to draw those tax returns from the IRS, 3305, which is kind of like an economic needs statement, and a 2202, which is a schedule of liabilities. And when you government ID, copy of your government ID, copy of your bank voided check, and you send that in, and then SBA will kind of gauge your economic need and possibly give you an additional increase in your disaster loan. It is still capped at 150,000.
Patrick, so for those who are furiously writing down the letters and numbers, we'll send out this recording later, and you can fast forward to a timestamp of about whatever this is, 35 minutes, and hear that. But Patrick, if you would type that email address that you mentioned where they are to send their request for an increase, you don't have to do it right now, but at some point into this chat.
Sure, will do.
There was something about additional grants to minority communities, but no definition that I saw. Can you talk a little bit about what that was for EIDL grants?
So for EIDL grants,
maybe I misread it.
Yeah. Well, we're really setting aside significant amount of the PPP money for CFIs, which are community financial institutions that are, that serve a lot of minority underbanked communities. And so that's a huge, this period starting on Monday until when we open it up to everybody is a really good time for the small, underserved, underbanked communities to go in and put in for their PPP loan ahead of everybody else. Because unfortunately, some of these communities were left out of PPP funding the first time around because of the crazy dash that was created in the first rollout. So we're hoping that this window will give them an opportunity to be first in line this time around.
Those on the call, some of your habits are to watch and not read what's going on in the chat. I will encourage you before you sign off today to go scroll to the beginning of the chat and read through. People are asking live questions and getting live answers. We're going to review some of those out loud for folks. Patrick, let me just ask you one that was just posted. If people pay back their EIDL loan within that first year where no payment was due, do they still owe the interest? Let's say they pay it 9 months after it was given to them. Would they still owe the interest on the 9 months?
Yes, they would.
And that would be, they would calculate that at whatever, 3.75% on the total value divided by the months, something. But there's a calculator for that.
Yeah, I would, what they need to do is call the customer service center. I'll type that in there real quick.
While he's typing that, for those who had a bad experience with customer service center at the beginning, they have fixed those challenges. Remember, you were like number 950 in line and you weren't sure it was going to be 6 hours. You may be 950 in line, but it's going to go a whole lot faster. And the staff that they have staffing these, the training is much better. You'll find them helpful. This isn't just 1-800 wait on hold.
Yeah, they've done a good job. But what they'll do is they're going to pay through pay.gov. But they need to go to the, they need to call and get there's a special number, but if they call that number, they can get the number for the payoff section, and they'll get a kind of like a bill to tell them what the total payoff is for that disaster loan.
Jensen, you've been, first Patrick, are there other key highlights that you'd like to offer to folks? They may increase the PPP the EIDL they got. They may get the grant that they did not get or the portion of which that they got. If they never applied, they can apply now. Many of you didn't think you were going to need it, and now you need it, so you can still apply. If you never did it, y'all, it's the simplest form and application you'll ever be a part of. 20 minutes of your life for $150,000. And you may ask for increase. Are there other key things regarding EIDL or you have a couple other borrowing programs. Have you changed the rules on the 7A? Isn't there a new interest rate for that?
So, so for current 7A borrowers, we're giving them an additional 3 months of debt forgiveness. So SBA will be paying their principal and interest from February 1st for 3 months. And that'll hopefully allow them to get back on their feet because they'll also be hopefully using the PPP. and that will give them some breathing room. If that's not enough for certain industries, we're also going to be looking at additional another 3 months or so of forgiveness for certain industries, but that guidance hasn't yet to be released. But 3 months for sure, and maybe an additional 3 depending on the industry. If you take out you're talking about these new businesses that are starting up. So if you take out an SBA loan after February 1st, SBA will also pay the principal and interest on that loan for 3 months as well. So we're appreciative that that's a good start.
That's fabulous.
The guarantee's been raised to 90%. So instead of 75, 85% guarantee from SBA to the lenders, we've increased it to 90%, which will hopefully incentivize them even more to make small business loans.
We are going to pivot to some Q&A. We'll be crisp in question and crisp in answer. It's also the case that at 10:30, when this concludes, we don't turn into pumpkins. So we're going to hang out for a bit. We know that April and Kari have things on their schedule, but might have a minute or two. Patrick, if you did also, and then chamber staff will be here to gather your questions. And there's several CPAs on this call that could also be helpful. So if we get to 10:30 and you didn't get it asked, hang out, and we'll do a little bit more.
We will also be keeping the chat and Q&A form and send that out as well if you were missing some of these questions and answers in the chat.
Oh, fabulous. Thanks, Vanessa. So Vanessa will send you a link to the video and she'll send you the full chat so you can see what was asked. Okay, Jensen, you've been following along on the Q's and the A's. Do you want to read out loud some of the Q's for which there were A's and ask some of the questions?
Sure. Sorry. So you want both Q and A?
Well, there were a few. Here's what I want. Is that there were some few questions that were asked at the beginning, and I can hit some of those. How about I'll do the ones for which there was a Q and an A. But if you saw a question, will you ask it for out loud? And if folks,
Sure.
again, you can raise your hand if you would like.
Thank you. Yeah. We have one. What is the difference between using the loan over 8 weeks versus the 24 weeks?
Wonderful question. April.
Okay, so if you're applying for a new PPP loan, whether first draw or second draw, you can now choose whether you want what your covered period is, and it can be anywhere between 8 and 24 weeks. And so it'll depend on, the loan is 2.5 times payroll. So, you can kind of do the math. You probably can't use it in 8 weeks, but you might, so you can choose, and you choose that upon requesting forgiveness. So you don't have to decide when you apply, oh, I want this for 10 weeks or whatever. So it'll depend, the period will depend on how much eligible expenses you have, to be able to get. And I don't think we said this. So the 60% has to be used of the loan, of the eligible expenses have to be payroll, and 40% can be those other expenses like we have already talked about, and the additional ones. So hopefully that asks. Now my dog's going to start.
That's all right. This is our lives. There's dogs in all of our lives right now.
So the one thing, Aaron, sorry to interject,
Please,
on
please.
the 8 to 24 week covered period is that there are compensation maximums, and they were defined in the first round of PPP as set dollar amounts. And you could apply for forgiveness early if you selected a 24-week covered period and could still obtain the full maximum compensation. Now, with the option to have the covered period between 8 and 24 weeks, whichever time period you pick, whether it's 12, 13, 14 weeks, you will have to prorate the compensation for the number of weeks in your elected covered period.
So 100,000 annualized.
Yeah.
So if a company had one employee that made $150,000, they could only get 2.5 times the 100. Nobody can get 2.5 times anything over 100.
Correct.
And then the forgiveness is about the 100 also, right?
Correct.
Okay. For everybody, just a tip. When you Google questions regarding this, check the date stamp on the article that you are reading. Is my grant forgivable? For example, is my grant deducted from my PPP? You can Google that right now and read that it's not, because if the article is 30 days old, it's not. If the article is 20 days old, it is. So be reading timestamps on all the things that you are researching. Look for the most fresh. Jensen, any other question?
Yes, there's a question here for Patrick about the guarantee of the EIDL loan. If you could just describe what that means. The phrase personally guaranteed, I think, is throwing a few people off.
So under 25, this is for the EIDL, right?
Yes.
Yes.
Okay, so under 25, so under EIDL, if the loan is under 25,000 or less, there's no need for collateral. So that's one thing. But on the loan itself, there is a personal guarantee that you'll be paying it back. So in essence, you are signing your name to that business's bottom line to say you will repay that loan.
Patrick, we've understood that not to be a personal guarantee in the same way that when you sign a lease, they can come take your house because you've personally guaranteed the lease and that they have claims on your property and stuff. Are they not signing as the president of the company? And if the company goes bankrupt, they're not personally responsible for this loan?
So so I'm trying to make sure I get it right, because SBA law, I'm kind of more of an expert in SBA traditional 7A loans. So I'll defer on that, but as I know it, if it's a federal loan, then that debt never goes away. So it could stay on. They're not going to come and take your home because there's no collateral being used for the majority of these EIDL loans, just UCC filings against business assets.
Right, y'all. So for those of you nervous about it, if you've never done the application for the EIDL loan, you don't name any property. You don't give any property information. They say under 25 is not collateralized and over 25 is, but it's not collateralized by it. You don't name anything. If your business were to use this, some of you have been nervous. What if I use this and then I go out of business? Well, if so, then they can come take your last desk, furniture, and laptop computer. You'll be out, you'll be at the end anyway, right? So the encouragement is to apply and to use it,
Right.
but not be super concerned. You're not personally, well, you can consult with an attorney or CPA. They're pretty, and we can send more information on your personal guaranteeness.
Yeah. You will know if you take out an SBA loan, you will know if there's any collateral attached because you'll be signing the loan document and confirming that there is collateral attached or not. So it's not going to come as a surprise to anyone that if they take out a loan, oh my God, they now have my home, attached to this loan. That's not going to be the case.
And if you are a nonprofit, the application is a little hinky for you because you're not the owner, you're the executive director or you're the board chair, and it asks you questions as if you were the owner. For us, the chamber, when we applied for our EIDL loan, when it said owner, I typed, there is no owner, it's a nonprofit. And then when they said owner's last name, I typed, there is no owner, it's a nonprofit. And when they asked the birthday of the owner, I made up a date. And when they asked for the owner's something else, we said there is no owner. It is a nonprofit. And someone, when they process that, will come back around to you. Jensen, other questions? Just to Jamil's, which was posted. Jamil asked the question, great to have you from Med Deli. Do people's tips count as your deduction as an expense, as a payroll expense? And April said yes. So I guess if they collect it as a company and pay it to the employee, yes. If it's given directly to the employee and the employer doesn't know about it, then probably no, right? But Jamil pools his tips, pays his people tips, and that is a deductible payroll expense. April, yes?
Yes, agree. Eligible payroll.
Eligible.
expense, I would. And Kari actually answered that question, but
Oh, sorry.
we're interchangeable. It's fine.
Sorry, I was looking at you in my system
Yeah.
and I saw you unmuted. Jensen, give us another question.
I only see one other that's not been answered. Kari and April are just on it. Jimmy asked, wasn't sure I had heard that correctly about the EIDL loan. Would you owe interest on the EIDL loan if you pay it back within the first year?
The answer is yes.
I did see a couple of other questions, and so two things I want to talk about. One, you might have heard about something that was part of the CARES Act originally, the employee retention credit. So again, in the past, you could not, if you use PPP, you could not take advantage of this credit. This is a credit against payroll taxes. So again, I'm not going to get into all the nuances at it, but it can be a pretty powerful credit. Now with the new law, you can use both. You can have both PPP funds and use an employee retention credit. You just cannot use the same expenses for both. You can't double dip. Makes sense, right? But if you have enough payroll expenses that you're able to do both, take a look. This will definitely probably need a CPA involved or someone to help you who's doing your payroll because it can be a little complicated. Second thing that I also saw, Jim Kitchen asked about proving the decline, the 25% decline and what forms will be necessary to provide. There's some discussion in the guidance about providing tax returns. So if you have a 25% decline in total, it says, you know, if you've got a 24% decline from 19 to 20, then you're assumed to have a decline in a quarter. So you can provide tax returns, 19 and 20, you'll have to provide it at forgiveness. Correct, Kari?
You have to provide it at forgiveness if you have a small loan defined as 150,000 or less.
Yes.
If you are applying and your loan is over 150,000, then you need to provide it at the time of your application. So everyone has to do it at some point, but the timing differs.
Nobody will have done their tax return yet, though.
Right. So my question for that, no one has a 2020 tax return prepared yet. So I'm not sure how that's going to work. I think you can probably also provide, if you have accounting, you know, it talks about financial statements, that sort of thing. So I think that would be appropriate.
So an output from your QuickBooks that shows revenue quarter compared to previous quarter, and I'm sure an affidavit or some attestation that it's honest. Defrauding the federal government, not a good move.
Not recommended.
Not recommended. Were there other questions, Kari, that you saw that you wanted to give voice to?
Sure, I see a couple coming in that I didn't get a chance to type. April and I are on our weekly town hall, so we are all about answering questions quickly in type mode. But one of them is about the employer portion of payroll taxes being included in forgiveness. There's no new news on that, so stay tuned. When this act and the IFRs came out, they were mostly focused on reopening PPP, so we will keep an eye out on that. And sorry, Aaron, looks like you're going to talk, so I don't want to talk over you.
No worries. I see from our friends at Plum. So Maddie, and I talked to Zoe about this also, we learned at the beginning, if your business did not exist prior to February 15, 2020, a year ago next month, you are ineligible for PPP Draw 1 and you are ineligible for PPP Draw 2. You may be eligible for an EIDL loan. Patrick may can speak a little. When they give you an EIDL loan, they need you to show a loss of revenue. So you probably need to be at least 6-9 months old in order to show, well, you're trying to show pre-disaster revenue and post-disaster revenue. Do you have any advice, Patrick, on new companies and EIDL eligibility? You are muted.
I would say apply and let the SBA determine that. Don't self-select yourself out of the program. So apply and let the SBA figure that out for you.
Perfect. Jamil wants to know if you didn't use all of the PPP, and someone else had also asked, what is this distinction of I intend to use it all versus I've used it all? You need to have both one or the other of that, but how do you do that, Kari?
Yes, that is a great question. We don't have clarity on all of it yet. I think I did mention in my speed coverage of the slides that when you apply for a loan, you'll have to make an attestation on the second draw that says I have used or I will use the funds. But it's my understanding that at the time of the application, you don't have to prove it yet, right? But the lender can withhold the funds until you prove it to them. So what does that mean? That is a great question. It might be payroll records. Some people have chosen to use payroll to cover PPP eligible expenses 100%. If that's the case, you can show a start period and an end period and submit payroll records. It's a little bit up in the air until we get further guidance. So stay tuned for that component. Just know when you apply for a second draw, you will have to tell them, yes, I have or I will use all of the funds.
Can you talk about the clock on forgiveness? The dollar arrives in your bank account and you have how long to apply for forgiveness?
So that has not changed from the previous act. So you have 10 months from the end of your covered period to apply for forgiveness before interest starts, or before payments are required. I'm sorry, before payments are required. But you have the full loan term to actually apply for forgiveness.
And the full loan term is, it is a 5-year loan at 1% interest. Is that the full loan term?
Yes.
So to remind everybody, you all borrowed it intending it to be forgiven, but several of you borrowed it, spent it, but didn't have any employees, did other things with it. If that's the case, it's a 1% interest loan, 5-year payback term, and you have that entire 5 years to request the forgiveness?
Correct.
How about that, y'all? So the 10-month clock is from the end of your covered period, that 8 or 24 weeks. And so nobody should be due until when? About now. About a month from now, right? February and March would be the first ones. Steve Woodard has a question, Woodham, sorry. If our business had been forced closed since March and the only payroll we have to show during the period from the first round of PPP was, Steve, do you want to unmute yourself and ask your question? Or,
I know what he's asking.
Okay.
I think I do. I think I do. There is, if the business is closed with no, if it's a difference between kind of nuance, probably discussion between, is it shuttered, is it going to open back up, or is it closed? If it is closed and not going to open back up, you're not allowed to request PPP, because again, they said that, you know, the intent of the program is to keep businesses open. So, you know, if you're in that temporarily closed, yes, you are allowed to. Does that
answer
help?
your question, Steve? Head nod. Jensen, Kari, April, Patrick, you guys, there's lots of things coming in now. Are there, and we're at the 10:30. So if anybody exits now, you're not leaving early. You didn't step out early. If our speakers need to go, we understand that too. But we're also going to keep going. Is that okay with everybody? So let's try to cover a few more of these. Jensen, did you see any, or any of our speakers see one you want to jump on?
Yeah, the most recent one is from Bredman's, who received PPP first draw, but then ownership changed. So they want to know if they should apply for second draw under the new LLC or apply for first draw.
Well, that's fascinating.
Yeah.
So on the application, it asks for EIN. So if the entity has a new identification number, then that would indicate in the SBA system whether they're on first or second draw.
But Kari, if they are a new EIN that did not exist from February 15th, 2020, how are they then eligible?
Yeah, so there is some guidance from earlier this summer that talks about what constitutes a change in ownership, and if truly the business is continued operating and it just was a change in ownership, then I believe they still are eligible. But that's a great question about whether it would be a first draw or second draw that I'm not sure that I can answer.
Who should they talk to? It is, but it's going to be complicated. It's both a move of location and in change in ownership, but the same branding and same food.
Yeah.
So the
lender is the one.
Yeah,
to talk to.
the lender will be the one that has that direct line into the SBA. So while we have definitions about how to handle a change of ownership, and as I was mentioning that the EIN does drive the application, it'll be up to the lender to review that specific scenario and determine the best way to handle it if it's not addressed in current guidance.
Erica, did your question get answered from the day? If you got, what were you asking about first draw forgiveness being granted and counting that as an attestation? What, as an attesting to what? Do you want to unmute, and are we not allowed to? Okay, go ahead, Erica.
Yeah, would that count as the attestation that you had spent it if you've already been granted forgiveness?
What are you needing to attest to? What are you asking?
said? Well, it said you had to make an attestation for your second draw that you were going to spend the first draw.
Oh, okay.
Right. So if you've been granted forgiveness for your first draw, that would suggest that you had spent it.
That counts as, by definition, you spent your first one.
Yes.
Kari, April, head nods. That you all agree with that analysis?
I see another question from Steve, who asked if our business has been forced to close since March and the only payroll we have to show during that period. Oh, we did. I'm sorry.
We did. Thank you, Jensen. That one we have covered. Y'all, this is intended to be collaborative. I know you go on these conference calls where some moderator is reading questions. Jensen's not just some moderator. She works at our chamber and is your community relations coordinator. We've got Vanessa, lots of team chamber, but just unmute yourself and ask your question if you'd like.
1 second, let me give everybody the ability to do that.
Oh, Vanessa stole that from you. We now trust you all not to show us homemade video. So you may now be unmuted and ask your questions.
There you go.
Can I ask one, please?
Go ahead, Jamil.
Okay, so basically what I understand for restaurants, they get 3.5 times the payroll, the average payroll, right? Do you divide it by 6 months or 12 months for the year? The average payroll divided by 12? So basically, we hear our payroll is a lot less from 2019 versus 2020 versus 2019. So basically, we add the total payroll of 2019 and divide it by 12 and multiply it by 3.5. Am I correct?
If you're on your second draw,
yes.
Second draws only are 3.5% or 3.5 times.
Okay.
But Jamil has described it accurately. He takes his 2019 payroll, divides it by 12, multiplies it by 3.5, and a restaurant, not just restaurant, hospitality, snack shacks, food trucks. There's a definition in there, but yeah. Jamil, did that answer your question? That sounds, that's better.
One last comment, and then I understand everything. Okay, so we have another location in Elon that maybe you addressed that, but I really didn't understand it. We did not use all our PPP for the first one because we closed, basically. We are on campus there, and there was no reason to open for business. There was no business coming. So if we use 70% of our our PPP, the first PPP, so all we have to do is promise to use that 30% remaining, even though it's after the first PPP timeline. The first,
That's right. That there is a way for certain people who have already applied. Maybe when they apply, they didn't calculate their payroll correctly, and they could get more. You can go in and apply again for that extra amount. Same for you for that 30%. Kari, help me. I think we're still waiting on.
I think he's asking something different. I think what Jamil is saying is that he got
what he received.
He spent 70, got $100,000, and he's only spent 70,000 of it. So long as he promises to spend the other 30, can he apply again for second draw?
So this is not addressed as of right now. On the form, they simply have to mark a certification that says they will spend the funds. It doesn't say anything about them having to apply for forgiveness for the additional funds, just spend it. So if that's the case, again, this is my opinion, it's not authoritative guidance, but from the way it's written right now, it sounds like if you just promise to use it for eligible purposes, then it's fine. But because it's outside of the covered period, you wouldn't be able to include it on your forgiveness application.
It may not be forgivable. You may owe it back to them at 1% interest, that portion, but promising to spend it makes you eligible to get a second PPP. What other questions do folks have? Jamil, I'm very glad to see you today.
Thank you, sir.
Patrick, I see you unmuted yourself. Patrick, and then going to Karen.
Yeah, I just wanted to give him the form. The bullet point is that he can pick either 2019 or 2020.
Yes, thank you, Patrick.
He can
Okay.
he can pick either one to use for the 3.5 calculator.
If you happen to have more expense this year, which you probably didn't, but if you did, if 2020, you may use 2020 payroll or 2019 and determine your monthly payroll.
Correct.
But aren't you supposed to use the lesser year? That's what my
You would want to use the
For
most,
discretion.
the
Yeah.
larger one, to get
Right.
the more loan.
right. But my accountant, which I can't wait to talk to him after this, he said you have to use the lesser year, where the lesser year
Not to apply, no.
No,
to the larger
not-
one. So
no,
in
that's
our
not
case,
correct.
The 2019.
That's the
That's not-
borrower's discretion.
Karen.
That was
you have-
actually my question.
Go ahead, Karen.
If I have, my 2019 payroll is more than my 2020 payroll, and can I base my 2.5 times the 2019 payroll?
Yes.
Yes.
Okay, thanks.
Excellent.
And 60% of the expenses have to be for payroll to be forgivable.
Correct.
Yes, Cosmos, that's you talking, and the definition of that is expanded a bit now. It's payroll, it's healthcare, it's there's a clear definition that you can look up on what counts in terms of that. Retirement. But do
So-
they count if they buy them hand sanitizer? Is that a payroll expense or that's an operational expense they can now deduct also?
That seems
It's
like
actually-
operational to me.
Yeah, they actually defined in those 4 categories of the new expenses, they actually did define things like hand sanitizer, air filters, things to take care of your staff.
As a payroll expense?
No.
No.
Operational, it's not payroll, so it falls under
Yeah.
that 40% limit.
Cosmos, does that answer your question?
Yes, it did. So then my follow-up question is, if I get like $100,000 loan on the first draw because I didn't do first draw, but now they've made it much more attractive retroactively. I really want to get to the second draw though, because ironically that's even more. I'm a restaurant. So then I would have to use 60,000 of that in payroll, hopefully within like 6 or 8 weeks, and then I could apply for a second draw, which would be, 50% more money than even the first draw, right?
Really, it says all of the first draw have used or will use, and I guess that's where we're unclear on what exactly that means. If you can, they're not going to disperse second draw until you make that determination, if you qualify otherwise. So I'm not sure what, hopefully they're going to come out and make it more clear on what exactly that means. If you can kind of, draw out, okay, well, I'm going to use, so it's not just the 60,000, you would have to use the 100,000 on eligible expenses in order to be eligible for the second draw.
And
Right.
this is between you and your bank. If your bank says
It
to
is.
you, Cosmos, we'll give you 100, draw 1, and then we want you to go outside, come back in 15 minutes later, promise me you'll spend all 100, and now I'll give you draw 2 for 150. It's possible. The bank is the one who's in.
You're right. Great point.
You are
I think
borrowing it from
there's
them. They have the ability to be flexi. Kari has a look on her face like, really?
Oh, no. I think there's a 60-day delay between the
Okay,
first and the second.
Okay, 60 days, but it isn't 9 months, and it isn't
Right.
60 days between draw 1, draw 2.
I believe so.
There's a question from GSO_QB UQ.
Yeah, sorry. Just about that payroll. So if you get 60,000, you can choose, say, for your staff. It doesn't matter if you pay that out over the 8 weeks or the 24 weeks. It's just that that's the amount you have to spend during that period. So if you want to pay your staff a longer amount of time for the 24 weeks, you can draw that out for them, right? It's not based on what their salary was that you have to meet their salary each week. It's just spending that amount of money over that weekly period. Is that right?
Well, there is, and which we didn't talk about, there are potential reductions in forgiveness for if you reduce someone's salary more than 25%, or if you reduce your FTEs, your full-time equivalents. So that we haven't talked about at all, which is an added complication for forgiveness. So it could potentially reduce your forgiveness if you're reducing their income. I mean, their wages.
The rate of
The
pay.
rate of pay. Thank you, Karen.
The rate of pay.
Well-
Somebody made $20 an hour, you reduce them to $15 an hour, or let's say you reduce them to $13 an hour, that's more than 25%. You may still get the PPP money, but you may not get it all forgiven because of the reduction.
Correct.
The ultimate
If it-
goal, if you're aiming for forgiveness for everything to do it, is use all of that at their current payroll and pay them out for the 8 weeks.
Yeah.
And then you'll get forgiveness essentially. But it gets murkier if you spread it over through 24 weeks and have to decrease their salary to do
It
that.
depends on if you change their hours or not. Because like if you decrease their hours, but you keep their stated rate of pay the same, like their employment agreement says, Aaron, I'm going to steal your example. If it says $20 an hour and then you reduce it down to $10 an hour, then you're going to be having some of that forgiveness issue. If you keep their stated rate of pay at $20, but say you're a cafe and you close, you start having limited hours, so you only need staff or you need staff for less time, you won't get a salary or wage reduction based on having them work less hours, only on changing their stated rate of pay.
Thank you. That's very helpful.
Awesome.
Thank you.
People raising their hands. It was in the order of Vicky, Bridget, Bill. So Vicky, go ahead.
Okay, great. Hi. So I'm a nonprofit and I wanted to know if the 3.5 times would apply to me, or is it the 2.5 with the second draw PPP?
Are you a nonprofit that sells food?
No,
What is your,
no.
What is your, if you were a
Literacy, adult literacy.
yeah, 2.5.
So it's 2.5. Okay, so then another, huh?
Go ahead.
Okay, so another question is, none of the amount that I would request, if I request it for, let's say, the 24 weeks, but because it's 2.5, if I pay out after 10 weeks, is that okay? Or do I have to? It is. So it has nothing to do with, if I say 24, I have to use it the same amount every week or something.
That's right. That's why with the new law, it gives you more flexibility. If you need more time to be able to spend it, that's okay. As long as you're, we've talked about the potential reductions in forgiveness, but taking all that aside, and you don't have to say that when you apply. You don't have to say, I want this money for 13 weeks or whatever.
Okay. Okay. And then, as a PPP, do I owe I'm still confused about the interest. So when I pay back, like my bank isn't ready because of the new laws and all of that, and we only received 35,000. So we're waiting for the form, but will I have to pay interest if I'm completely forgiven?
If your loan is completely forgiven, no.
Well, you might have to pay it, but it can be lumped into the forgiveness amount. It depends on your lender. Some lenders are requiring interest to be paid, but then on your forgiveness application, there is an opportunity to have any interest that was paid forgiven.
Okay.
But that's not
great.
as long as you pay within the 10-month deferral period, you'll be fine. So no interest accrues or anything from the end of your covered period for 10 months.
Okay. Okay, great. End of the covered period, the end when I used it.
Count the end of your
10
covered
months from
period,
then.
10 months, and that's
Okay.
your window of no interest, nothing accruing on that loan.
Okay,
Bridget,
great.
thanks,
Thank you.
Nikki. I'm glad that you're here. Bridget, then Bill.
Yeah, so I had a question. I'm also a nonprofit, and I saw someone put a question in the chat about what needs to be included in the gross receipts in our calculations, like if government grants that are specifically COVID relief related need to be included. And you all said that it's still sort of to be determined.
Unclear. It's
Yeah.
very clear about PPP and EIDL. If you receive those are not included. But like the other types of grants, we're not sure yet.
Where would be a good place to watch for more information on that?
What do you think, Kari? Our website,
I would take a look
So-
at the
our
SBA.gov
SBA website. We link to that.
/PPP.
We do link to that. So AICPA.org/SBA is easier for me to say than the full guidance site that we go to for the SBA. So we do have a link to all of the SBA guidance as well. So if you can remember AICPA.org/SBA, we will help direct you back to all of the official guidance.
Okay, that's
Uh,
great.
and
I wrote that
Patrick
down earlier.
was-
So.
Right. And Patrick, go to or Google. If you just, if you're Googling SBA, there'll be the big banner. It'll be, you'll be reading the interim final guidances and looking for a new FAQ. But Bridget, I have to think that if some donor gave you $100,000 because they felt bad because COVID was killing you, that's going to count as income. And the difference between a donor giving you the $100,000 because they felt bad and Z. Smith Reynolds giving it to you is almost indistinguishable. So why wouldn't that count? It's going to be hard for some folks that did a lot of fundraising to maybe to show their 25% reduction, but let's look for FAQ on that soon.
Are
Yeah,
you
I think
allowed
that's sort
to-
of what I was thinking, but we definitely had a reduction in income from programs. We just did a really good job fundraising.
Yeah,
So-
and so you're probably
So
going to
that
be,
the
you may be
grants
ineligible.
and right.
Are
There's
you a
some
live venue?
No, she's a
nonprofit, and we've just moved everything online. So, an Art Therapy Institute. So,
Bill Shipman.
Hey there, thank you everybody. Really appreciate your commentary today. I've got a couple questions I think are kind of straightforward, but maybe not. So first off, we're a startup that founded prior to February 15, so we should be eligible. We didn't have payroll online and have quarterly filings ready for PPP 1. So we would like to file for PPP 1. My question is that regarding EIDL, being that we're a startup, do we have to demonstrate economic distress as a function of COVID because we're still generating product and haven't actually we're not in the market per se yet? Is this a complicating factor, or since we are legally incorporated by the requisite date, we get to proceed? Does that make sense?
There's nothing that says you can't.
Okay.
all right.
It's
That's-
designed to help you recover from a disaster. Patrick said, don't kick yourself out. Patrick, do you have a comment on that?
I would just think, if you have any type of gross revenue, that would help the SBA then calculate what kind of working capital you would need for 3 to 6 months going forward. So there has to be some type of baseline for them to gauge your economic need.
So would investment count? Because investment typically is not counted as income.
Good question. Yeah.
Yeah.
If you want, we can talk offline and
Okay.
go into the nitty gritty. I can send you the disaster loan kind of guidelines that spell out what counts and what doesn't.
Because that intersects with my question and I apologize if we've already answered the question for PPP2. being that we don't have any, we did not exist in 2019, we can't demonstrate an economic differential for any quarter.
So there are alternatives for that. Were you in operation in the first quarter of 2020?
We were legally incorporated on February 6th.
Okay. Were you in operation?
Yes.
Okay. Because I think it says, Kari, help me with this. If you're, you can compare, like you could compare first quarter.
So when did your operation start?
I mean, in practice, they started prior to incorporation. Our legal incorporation date is February 6th. We have received some small cash flows as receivables in Q2, I think is when that cash flow came through, but we've received no other receivable cash flow since Q2.
Of 2020?
Correct.
Okay. Can I send you my email?
Yeah.
And Bill, who's your bank?
Because
Your
I
bank
think
is
there is a way to compare. I think it's comparing first quarter 2020 to first quarter 2021, but then I'm trying to think how that works because we're not, anyway.
Yeah. I'm going to send you my email, Bill, and we can dig into this together.
Awesome. Thank you so
It's
much.
incredibly helpful, Kari. Bill, those were great questions. My personal encouragement is go to the economic injury disaster loan application, fill it out, just don't hit submit. And what you'll see is what they're asking you regarding revenue. They're going to ask you things like revenue of products sold. So they're not going to ask you about your investments. Those were cash that came into your organization, but that's not what they ask you. They ask you about some other things, and it take 20 minutes of your life, and just don't hit submit at the end if you're not comfortable. But that, I think, would help answer the questions Patrick was saying to you about what they want to know. Jeffrey, you got a question? Thanks everybody for hanging with us. Let me just pause. April and Kari, you've exceeded your commitment to us. We are grateful for it. Do you all need to sign off?
I need to head out, but I do want to correct one thing. So I mentioned that 60-day time limit between first and second draw, and now, of course, I can't find it. So I'm wondering if it wasn't a conversation I had with the lender for one of their particular requirements. So I just want to retract that if I can.
Retracted. But if you need to pop off, Jeffrey, is your question for either of these two, or can we help you crowdsource it if they go?
Actually, since you just said that, and that was addressing my question, so that's great, but that means I could apply from two different lenders then, right? One for PPP 1 and one for PPP 2?
No, your EIN will be in the SBA system, and it should catch that.
But if there's no time difference, like you just said, there's nothing wrong.
I think what she's saying, not to put words in her mouth, is we don't know of any specific time frame. There is still the requirement that it, which could be further clarified on whether it, has been used or will be used.
Because I know it will all be used, because I think our payroll is going to be the same as 2020, and in that time period, I would have used both PPPs.
You may not need to rush. Patrick believes, and so do many, that unlike last time, the fund should go a little longer. Your challenge, Cosmos, will be when you go to draw number 2, they're going to say, well, how much did you get the first time? And you're going to say, I don't know, it's still in process. And so you won't be able to promise them you'll spend it all because you won't know what it is yet. There will have to be some time between the two. You're going to have to get approved, get the money. But there may not be 6 months between the two.
Yeah, I feel like they're going to come out with much more clear regulations on how that process is going to work, because there's been way too many questions about it.
It's mentioned in, it all blurs together. It's mentioned somewhere that there'll be what's called an unresolved borrower flag, essentially. So if the first draw hasn't been forgiven, and if you go to a different lender for a second draw, there should be something indicated to the second lender that they're already an unresolved borrower.
Yeah, don't do anything to cause too much attention on yourself. I would also advise you. So stick with the first borrower, find a borrower, talk to them about the issue of may need to go twice, ask them what they advise on the go twice. You should have a local bank who now has the bruises and broken arms from the first PPP to know enough to be able to help you. That's what I'm thinking. Jeffrey.
Good morning, and thank you everybody for pulling this together. This is very informative. I have a bit of a unique situation, and we haven't spoken a lot about people who are self-employed or individual consultants or sole proprietorships. And I'm certainly willing to take this for an offline discussion. But my situation was that in 2019, my business was incorporated in 2018. It was a going concern, or it is a going concern. I do technology consulting. In 2019, it was more part-time. But then at the beginning of 2020, I was foolishly optimistic and left my full-time position and jumped into running my business full-time. Then COVID hit. So I guess my question is there any ability for me to apply for PPP funding? My business didn't necessarily lose money, but it didn't grow in the way that it was supposed to because my client base basically dried up.
We're talking about first draw?
Yes. Yep. This would
Okay.
end up being first draw because I didn't apply originally in 2020. And again, I'm willing to take this offline because it's a little bit nuanced.
Sole proprietor is a lot of our membership. In April, there's no requirement he shows any loss for a first draw.
Right. You have to say, you certify that you have economic need. What does that mean? So we just are, use your good faith determination on whether you have economic need, and it'll be limited to what it's going to be limited to, though, is your 2019 Schedule C, 2.5 months of that annualized. So that's what
He may pick 2020 or 2019? Or is that only for draw 2?
For both.
Okay,
For both.
so he could pick
Yes.
2020. Jeffrey, you get to pick 2020, but he could do his 2020, Schedule C's not been filed. He could do his 2020 income divided by 12 times 2.5, or 2019 income divided by 12 times 2.5 as your maximum eligible.
Your net Schedule C. So it's after, it's not your gross 1099. So it's you compare to 2019. Yeah, I had a moment of like, 2019, 2020. Obviously you hadn't done your tax return, but you'll, kind of pull that information together. Does that help?
Okay, it does. Thank you very much. I appreciate it.
Jeffrey, we're glad that you're here with us, and thank you for asking that question.
All right, I really do have to pop off.
Go ahead. See you, April. Bye,
Thank you,
Kari.
everybody.
Take care. I gotta
Earl,
go
we
too.
can see if we can help you. And thank you, Patrick. Patrick, we are grateful for the three of you guys. We are so appreciative.
Thank you.
Earl, we're going to take your question, just us as friends. Oh, you have to unmute yourself, my friend.
Thank you. My question is, if you receive the first draw of the PPP, would it be simpler for me if I could get the returns done to go ahead and get them done for 2020? Would that give me a smoother transition into the second draw?
So are they still with us? And we may have a CPA on the call. I don't think your filing that is required at all.
I understand.
Does it even help? I don't even know if it
Yeah.
helps. All you need to do for draw 2 is to say I have spent it or to say I will spend it. You don't need to produce. They know most businesses won't be filing their 2020 taxes until what? January, February, March, April, May, extensions, October. So I don't think tax returns will be anything they care about. Your lender, whoever that was, though, may tell you what they want you to prove in order to go again with them.
So can the lender cross-check, or do we have to fill in line by line for the government's sake or for their sake?
My understanding, so let's say you got $50,000 of PPP 1. When you go for second draw, they'll ask a question, did you spend it? And you'll say yes. Or you'll say, I plan to spend it. They'll say, prove it. And you could attach your payroll company's record. You'll somehow show them that the money got spent before they'll do draw 2. But that'll be up to them, I thought she was saying, on how they make that choice. Did you spend it? Is it?
Yes, we did. So, you know, I'm just trying to be in compliance as we move forward. You know, a lot of things were answered today that I had questions for. That's why I wasn't asking questions as much as I usually do.
I'm grateful to see you. And if anybody needs blind installation, window treatments, residential or commercial, Earl Monroe.
And sales of the products.
Okay, thank you. Who else has a question? Anybody else who's on our call? Omar, I see you from Bread. Well, I don't see you, but I see your name. I would follow back up with your lender. From whoever did the first PPP is probably the best advisor for you on what to do because of that change in ownership. And if not them, then whoever your current bank is if you changed it. Y'all, we are so grateful for your membership in our chamber or in whatever chamber you are associated with. We'll continue to bring you programming like this. There are other ways to be involved with us. We've got a restaurant, retail, and hospitality meeting that happens once a month. There's a nonprofit group that meets once a month. We will be restarting a Black business leadership group that's going to be meeting once a month. If there's something you need from us and call on us, you've hired us, we work for you. We want to continue to deliver you all value. We're grateful for your participation in this. And Vanessa, a personal thank you to you and to Jensen for organizing this. Well, we just got posted. There's a real estate call also you can see. Chamber's annual meeting coming up on the 29th, 8:30 in the morning. All your friends will be there. We're going to create some nice networking opportunities, good information. But I think for us, that is all we have to discuss today. Thanks, y'all. Thank you, everybody. Good meeting.